Hello everyone, it's Hiền Nguyễn from ST Consulting. So today I'm going into a brand new topic in the videos, in this series of videos I'm going to focus on the investment in Vietnam market. Okay. This first video I'm going to look into the overview as a whole. And I'm going to break it into 3 parts. The first part, I'm going to focus on the economy as a whole. An overview of the recent development of Vietnam economy in the past few decades up to now. I will focus on some of the most important indicators, especially more important for foreign investors, foreigners doing business in Vietnam market. Okay. And then the second topic, I will focus on the future of the economy, the future of the business and investment environment. Is the country an attractive destination for investment in the short term, medium term or long term or not? And then the third topic, I will focus on the overview of some of the most important sectors. And then the third part, I will discuss briefly about the potential sectors that I think going forward it will be beneficial from the development of this country. Okay, so let's get started. Remember to subscribe to my channel for the future videos, for the upcoming videos related to this topic as well. Okay, let's start with the first indicator about Vietnam. This is GDP growth over the last few decades. Okay, since the country opened with the Đổi mới revolution, which is also means restoration, starting 1986. After the open the economy for the last decades, in the first decade, the economy was fluctuated, not stable, and it went up very high in growth with this low start, and then down and up again, as you see in this chart. But since 1994, the Vietnam and the US and Western economies have established the normal relationship. Vietnam economic growth a very stable and high level. Okay, except for the 2 COVID year, Vietnam GDP growth was almost always above 5%, and many years it was above 7 to 8%. So this chart, as you see, is the growth of Vietnam economy in the past few decades. The sustainable economic growth improvement, as you see, that only since 2010 to 2023, the growth of the economy has tripled GDP from only 142 level to almost $450 billion per year, expecting 2023. Almost similar as per capita earnings is from less than $1,000 to almost 5. And how about compared to the region? So Vietnam, as you look into this chart, Vietnam has been sustainable, growing above its overall Asian region, okay, over the last 10 years. The gap is quite big as well, few percentage above the overall average of the whole region. Because of this continuation of the growth higher, faster than the whole region, the contribution of the GDP to the whole group has been also growing sustainable in recent years. It's from like less than 8-7% to recent years 9% and then 10% and some year even above 10% contribution to the whole ASEAN group GDP. How about the second most important aspects that foreigners care about and that everyone care about? The inflation control is very important for every country. As you see that what's the situation going on in the Western economies at the moment. In the last 1 year, they have been trying so hard to control this indicator. And this issue is even more important for countries, emerging countries like Vietnam, because it is a country relies on a lot of the investment into the futures, growing into the futures, and relying on foreign investments as well. So if the inflation is fluctuated and is unpredictable, so investors and business doers could not forecast what the real returns they will have in the future. If it's unpredictable, it's unstable, then the investors, the people who do business will fly away, and it's very hard to get the trust of investor again. So for Vietnam economy, you can see that over the many years there was high fluctuation of the inflation, and in some years it's even went up to 20% of the inflation. It was so bad. But in the last 10 years, Vietnam has been doing very well in this part. Okay, the inflation has been stable around 3 to less than 5% over the last 10 years, and that is a good sign, because investors and also people who do business in Vietnam will have better ability to look into their business, look into the investment, to forecast for the future investment and to get the profit back after the investment period. The third aspect that also very important for foreigners is, I think we need large investments from outside, FDI, as well as indirect investment from the market. We want to attract more capital to increase the country output level. Before the 10 years before, Vietnam FX was fluctuated very highly each year, and many years the Vietnam dong depreciated with a very large gap, over 5% and even 10% or so. So it made investors worry a lot, because if that FX fluctuated too much and is unpredictable, then after the FX adjustment, their return to their investment is very low and is unforecastable. However, you can look at that in the last 10 years, Vietnam has controlled this FX very well. It's stable, and each year with a small proportion, few percent depreciation of Vietnam dong, and very stable, except for last year few months that there was a huge fluctuate up and then back stable again. But last year was an exceptional, Many countries face the same problem last year, and Vietnam at that time just got out of the COVID situation, and the output and the manufacturing and everything was not back to normal, and so we had big import and compared to export. So there was a large trade deficit that made the Vietnam dong got that into that situation. However, then when the manufacturing has been back in recent months, then the Vietnam đồng has been back to normal situation, and so that is a good side. So both inflation control and FX control over the last 10 years looks quite good for Vietnam economy, and this should help investors and also business doers, foreigners coming to Vietnam have better risk control. So you can see that the surplus and the overseas remittance have good state in the currency reserves over the last 10 years. The currency reserve of Vietnam has been increasing in a very steep chart in the last 10 years, as you see here. Only a very short period last time dropped, and then the trend is up again now as the country is back to its normal export production. So reserve for import, especially in the last few 10 years and in the last 5 years, the USD reserve is always above 3 months import, which is a threshold safe level. Vietnam government has been putting a lot of effort and energy to support the open trade open economy, to increase its activities with most of the countries around the world. Starting since 2006, being able to join WTO. Since then, Vietnam has signed 16 FTA agreements, okay? And then another 4 are under negotiation at the moment. And then Vietnam also have trade agreements with 86 countries around the world. Up to now, Vietnam also has signed over 80 double tax avoidance agreements with over 80 countries in the world. So the double tax avoidance agreements is very helpful for investors and companies from these signatories to get tax exemption, tax deduction when doing business in Vietnam, okay? So they don't have to pay double tax in the both in Vietnam and also in their original country. How about the Vietnam political environment? Vietnam is considered a very pretty stable political economy country. It has one party only, and that one party doesn't have too much drastic fighting inside. Although they have conflicts, they have fighting, but it's not too drastic that makes the whole economy disruption. Compared to many countries in the region, there is an absence of violence and terrorism in this country. And Vietnam, among many other frontier countries, have corruption, right? But in the recent years, the leaders have been focusing cleaning up the corruption. It makes the country better for people to live in and for doing business, for doing investment. So because of that, you can see that with the World Bank for the last 10 years, Vietnam most of the time has a very high political stability index around 0, normal. Many years is on positive level. Vietnam in the last 1 decade, okay, the export and import turnover has been triple only in 1 decade because of all of the openness to the FTA agreement, to the any supportive in the investment into Vietnam. Vietnam also open to tax deduction, tax exemption to many new business establishment in many sectors. So this also support a lot, attract foreigners and to establish new business. And then most of the time in the recent years, Vietnam has trade surplus that help, as I discussed before, help the FX reserve, help the USD reserve for the country. And another fact that made me proud of is that even though Vietnam, most of the export at the current level still very much raw material. Okay, I'm hoping that in the future we will export more end-use products. But still, Vietnam is second largest country in the whole region in terms of export turnover. Okay, and it's among the top 20 countries in the world import-export turnover. With all of that in mind, that also means with all the encouraging policies and openness, Vietnam also attracts a lot of FDI in the last few decades, especially in the last 2 decades. FDI inflow into Vietnam has grown fivefold over the last 2 decades, and only in last 10 years only, okay, then it's double. So the level of the FDI for Vietnam at the moment is around $16 billion inflow year on year. Compared to the whole region, Vietnam is third among all the ASEAN members, attracting the FDI inflow. Okay, and on the extra ASEAN FDI, then Vietnam is ranked second. And especially through the recent trade war between China and US, Vietnam is one of the countries that have most benefited from this. It's not just benefited from the companies that fly away from China looking for other countries to establish their business, to establish their manufacturing factories. But also upfront, you can see it's benefited from direct import from the US. In the LDC Asia, okay, Vietnam had gained highest import proportion from US for the whole region. Vietnam, 2018, only 6% of the whole region. Compared to India, India was around 7%. But then 2022, Vietnam was almost 13% proportion of the whole region, this region, and India only went to 9%, so very small increase. Another positive indicator that we will see going forward Vietnam will be able to do better is that Vietnam has successfully lowered its public debt ratio in the past few years. Better spending controls and more efficiency in its spending. So the public debt has declined from 51% GDP in 2016 to 40% in 2022. So that while the public debt ceiling for Vietnam set is at 60%. So we have a huge gap here for the country to have the room to be able to do its public investment in the future, especially focus in the areas that is still weak now, like infrastructure, logistics. And with all of that, we also see the M&A activities increasing very dramatically in the recent years. Yeah, before 2010, M&A activities was than 1 billion per year. Okay, since 2010, the growing of the M&A activities has been very high each year, and in recent years, most of the time, the total M&A each year is over $5 billion, and even some years it was almost $9 billion. So have Vietnam prepared itself steady and ready to be a good investment and doing business destination in the future? Yes, with all of what I have shown you, yes, Vietnam has been quite steady and in good stage, right? How about if it's ready or not? Then we might not be able to answer yet. So let's get into to look further to see if it's a ready country for good investment destination or not. Remember, to subscribe to my channel for the future videos or the upcoming videos related to this topic as well. Okay.